The most important one is that with full self-driving, a Tesla vehicle gets into an accident every 3.2 million miles. And that compares to one every 500,000 miles for the average car on the road.
Okay, so Cathie, hold on. Good afternoon. It's John Ford. I just want to clarify. Did you say a $2,000 per share price target? Tesla right now is under $200 a share. So yes. Even if you were to 10x that would be an over $5 trillion market cap. Is that what you're saying?
That is what we're saying. We think that the robo-taxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030.
Early this year, ARK Invest founder and CEO Cathie Wood expressed her bullishness in Tesla stock, even during the downturn the stock experienced in the past year. In December of last year, Wood predicted that Tesla shares would reach $1,500 by 2027, representing a more than tenfold increase. Soon after that, ARK Invest analyst Tasha Keeney tweeted that the firm's 2026 price target for Tesla would be around $500 per share. In line with this, Wallet investor analysts expect that the stock will be trading above $300 in 2025. This is not too far off from ARK's 2026 Tesla stock price target. Note that ARK's 2026 price target for Tesla of about $500 per share is based on its EV business alone, according to Keeney. The projection is adjusted for the 3-for-1 stock split that became effective in August 2022. Keeney noted that the firm is removing autonomous driving and any form of ride-hail from the valuation framework. The firm believes that these two factors will drive more than 60% of Tesla's value over the next 5 years. Keeney also noted that the $500 per share projection is more than a 4x increase from the stock's current levels. Removing autonomous driving and any form of ride-hail, which we believe will drive more than 60% of Tesla's value over the next 5 years, our 2026 price target will become roughly $500 per share post-split based on EVs alone, more than a 4x increase from the current price. ARK Invest CFA Tasha Keeney said in a tweet in early January. While referring to Keeney's tweet, ARK Invest Director of Research, Autonomous Technology and Robotics, Sam Corris said, "The company's superior drivetrain efficiency and low battery cost should make it one of the best positioned to weather any cyclical slowdown for automakers. As it has done in the past, it can be the first to lower prices, which puts pressure on other automakers," Corris added. Agreeing with the analyst views, ARK Invest CEO Cathie Wood said Tesla does not need autonomous ride-hail to be a success. The EV opportunity alone is enormous, she added. In an interview, Wood explained ARK's $1,500 price target. In our view, our $1,500 price target for Tesla, it's roughly a little over $200 now, but our $1,500 price target in 5 years is 2/3 because of autonomous, said Wood. She even pointed to BYD, saying that the autonomous strategy has never been mentioned by the China-based EV company. Wood shared that we hear it more with XPeng, a Chinese electric vehicle manufacturer. But again, they, from a unit volume point of view, are far behind BYD and Tesla, explained Wood. So that's how we're looking at the world right now, says Wood. I think when you're talking about electric vehicles, you're not just talking about the drivetrain strategies. I think the companies that are going to win, as I mentioned, are not focused only on electric. According to Wood, they're focused on autonomous, which means they are focused on 3 of ARK's major innovation platforms. First, robotics, autonomous vehicles or robots. Second, energy storage. They will be electric because the total cost of ownership now for our vehicles is lower for electric than gas-powered. And 3, artificial intelligence. Wood said that these are the 3 major platforms. Artificial intelligence will power these autonomous electric vehicles, and we believe that Tesla, from a thought leadership point of view, is leading the charge, so to speak, in this movement towards autonomous electric vehicles. As you all know, Tesla is, first and foremost, the world's largest electric vehicle manufacturer. It delivered 1.3 million cars worldwide in 2022, and it holds a 65% market share in the US alone. While the competition is growing, Tesla might just be getting warmed up, because Musk believes the company can produce 20 million vehicles per year by 2030. That's not all. Tesla is also a leading developer of autonomous self-driving software. which is not only a financial opportunity in and of itself, but it paves the way for Tesla's ambitious plan to build a fleet of robo-taxis, which is slated for release in 2024. On the company's Q4 2022 earnings call, Musk spoke generally about the potential for fully autonomous cars to create more value than anything in history. That's supported by ARK Invest's lofty predictions for the autonomous ride-hailing industry. The firm believes that any Tesla vehicle on the road with full self-driving capabilities will have the potential to generate $20,000 in revenue per year by transporting people without human assistance. Overall, ARK Invest is betting autonomous ride-hailing will create $14 trillion in value as soon as 2027, with $4 trillion in annual revenue across the industry. Remarkably, ARK Invest says using autonomous taxis could cost as little as 25 cents per mile, which means they have the potential to replace 60% of short-haul flights based on affordability. That's a big opportunity for Tesla, which has approximately 2.7 million cars on the road collecting data to feed its self-driving models right now, 10 times more than its closest competitor. That said, Tesla's position at the frontier of cutting-edge technology naturally aligns with the investment philosophy of Cathie Wood and her firm. Known for its focus on innovative companies capable of disrupting established business models, ARK Invest holds Tesla as a substantial portion of its portfolio. Because of Wood's firm confidence in Tesla, it didn't escape people's attention when just a few weeks ago ARK unloaded some of its Tesla shares. In fact, ARK Invest exchange-traded funds, or ETFs, sold off around $21 million of the stock only hours before Tesla reported its second quarter earnings, and the subsequent dip in its share price. That was in July. Now, just a few days ago, Cathie Wood's ARK investment dumped more Tesla shares. The ARK Innovation ETF shed 72,631 shares of Tesla, while the ARK Autonomous Technology and Robotics ETF sold 3,794 shares last week, according to the daily trade disclosures that ARK posts on its website. Those sales were worth $18.8 million based on Tesla's closing price of $245.34 at the time. The next day, ARK sold 31,749 Tesla shares. The disposal would have fetched ARK $7.7 million based on Tesla's closing price for the day of $242.65. Last week alone, Cathie Wood's firm shed a Tesla stake worth $26.45 million. Notably, ARK's funds have been selling Tesla shares periodically this year, including at various points in June and July. As a matter of fact, the total number of shares sold since June 12th, including the latest sale last week, amounted to 915,565. It is worth noting that in February, Wood claimed that if she had to buy one stock today and hold it for the next 10 years, it would be Tesla. That doesn't seem to be true now, but who knows? It is also worth pointing out, though, that Wood's ARK is into the habit of buying its key portfolio stocks when they drop and taking profits from them when they rise. However, ARK's recent Tesla trades have not conformed with this pattern. Wood has hinted in the past that her fund sells Tesla and uses the cash to buy stocks that are undervalued, terming it as a capital allocation strategy. Despite the pullback, Tesla is still up about 100% for the year. Despite the string of selling, Tesla continues to be the top holding in most of ARK ETFs, of which it is a part. The stock is a top holding of the flagship ARKK fund with a portfolio weighting of 10.67%. That said, Cathie Wood is still a Tesla bull despite her recent Tesla shares sell-off. This is due mainly to her belief that EVs are the place to be. Wood explained that it seems as though the total cost of ownership of an electric vehicle is already lower than that of a gas-powered vehicle. Wood believes that this will help understand why electric vehicle sales globally were up last year. I believe it was 62 or 64%, while gas-powered vehicles were down about 7% globally, said Wood. So the electric vehicle shift is underway. Consumers want electric vehicles, said Wood. She said that the total cost of ownership is cheaper. So last year there were 7.7 million electric vehicles sold around the world. We think that number is going to 60 million in the next 5 years, said Wood. But electric is not the whole story here. In fact, from our point of view, when it comes to Tesla, their autonomous strategy, autonomous taxi platforms, is much more important than their electric vehicle strategy. There you go. Now, whether Wood continues her Tesla trades remains or not to be seen. But based on her previous statements, although she does sell her Tesla holdings from time to time, she will remain a Tesla shareholder in the years to come. Make sure to subscribe for more.